For those of you who don't know, this is something that was started about a year and a half ago, and they are basically education sessions that are designed to help people that are getting a little older with spinal cord injury or any disability really to manage their lives and avoid some of the issues and make some of the plans that they're going to need to as they get older and maybe find out about a few things that might happen that they're unaware of, those kinds of things. And we've done sessions on a number of different topics. This one is a very tough topic to address because people come at it from very different angles. And it is, planning for the future with your finances.
And welcome everyone. It's great to see all of you. So as Duncan mentioned, I do work on our information line, and I'm going to say to start that some of your questions I might not be able to answer during this session, although I'll certainly do my best. But if I can't answer them during this session, I will research them afterwards and get back to you, or you can call the InfoLine directly if you want to discuss your particular situation. As Duncan said, this topic is complex, and I don't want to spend a lot of time going over stuff that you already know. So it's going to be a fairly high level presentation with lots of time at the end for questions. But if there's anything that you want more information on, don't hesitate to ask. So the first caveat is that I am knowledgeable about funding, but I'm not a legal or tax expert. I'm not an accountant, not a lawyer, none of those things. So I may at times refer you back to other professionals for things that I don't feel confident answering, because I want to make sure that the information that I'm giving you is accurate and information that I can stand behind. All right, so to get into it, let's talk first about your income. So if you've been working or you worked at any point during your life, you can start taking CPP at 60, or you can defer it after the age of 65. Now, there's advantages and disadvantages to both options. If you start taking it at 60, you obviously get that income at an earlier age, but you get a smaller amount per month because they're assuming an average lifespan. Of course, you don't know how long you're going to live, but they're giving you an average lifespan and basing the amount per month off of that. If you defer after age 65, you get more per month, but of course, you're waiting longer to get that income. So it really depends on what other income you have at those ages, how much you need that money, and realistically, how long you think your lifespan is going to be, with, of course, the understanding that nobody knows that for sure. But if you have a terminal illness, for example, or something that will likely cause you to die a little bit earlier, then you probably want to start taking that money at an earlier age. So at 65, people transition from PWD, if they're on PWD, to regular CPP, OAS, and GIS. Lots of acronyms there. Let me explain what those mean. So PWD is provincial disability for people who are low income during their working years. That ends at 65. So at that time, you would transition to Canada Pension Plan if you're eligible for any money through that, if you've had employment income during your life. Everybody at the age of 65 qualifies for old age security. That's the OAS. The amount will depend a little bit on your family situation and how many years you lived in Canada as an adult. But pretty much everybody is going to qualify for something through OAS. Now, GIS is the Guaranteed Income Supplement, and that's for people who are lower income after their other retirement income is taken into account. So if you have a fair bit of CPP plus the OAS, you will probably not get the GIS, or if you have other pensions or other money in RRSPs. But if you are lower income, you will get a top up from GIS, which can be up to about $1,000, depending on your family income and some other factors. So between OAS and GIS, if those are the only two sources of income that you have after 65, you're going to be looking at about $1,600, $1,700 maximum, again, depending on your family circumstances. Not a huge amount, but better than zero. So You can also start taking payments from your registered disability savings plan if you have one, and we'll talk about that one a bit more in a moment. Or you can get payments from your RRSP or any other investments that you have. Now, I'm going to highly recommend that when you hit 65, if not before, you need to be talking to an accountant about your taxes and what it looks like when you start withdrawing these funds, because there are tax implications for every withdrawal that you make. And there's certain ways that you have to do it that I don't understand because I'm not there yet for myself. So talking to a professional is a really good way to do that, to make sure that you're maximizing what you can receive, but also minimizing the amount of tax that you're required to pay. Now, your income from long-term disability benefits plan is an interesting one. Many long-term disability benefits plans end at 65, or they may end at retirement or within a couple of years of retirement. It's rare that they would continue for your entire retirement, but they might. So read the fine print on your plan, talk to whoever is in charge of your plan, try and figure out what you're actually eligible for there and when it's going to end, because that's going to have a big effect on the rest of your savings during retirement or your income during retirement. Likewise, if you have payments from insurance, such as WorkSafe BC or ICBC, these are going to depend a lot on how your plan was structured. Again, talk to an accountant, talk to the lawyer who helped you set these payments up. Make sure that you know when these are going to end. I can't tell you that because I can't read the fine print on your plans, but it's really important to know ahead of time what that looks like so that there's no surprises. So with taxes, I'm going to highly recommend that everybody apply for the disability tax credit if you haven't done so already. So that's a tax credit for people who have a significant disability that has a marked, this is government language, a marked impact on your daily life. So if you're a full-time wheelchair user, due to a spinal cord injury, it's very likely that you won't have any trouble getting the disability tax credit. For anybody who is ambulatory some or all of the time, it becomes a bit more challenging, and it will very much depend on the conversation that you have with your doctor about how your disability impacts your life. But why should you get the disability tax credit? It's the basis for some of the other programs, such as a registered disability savings plan, the Canada Disability Benefit. We'll talk about these in a minute. And in some cases, it's a requirement for getting some of the tax breaks related to medical discounts on your taxes. Make sure that you're claiming all of those medical expenses and medical equipment on your taxes. There's a few documents that will outline exactly what you can claim, how much you can claim, and how much that will impact you. Obviously, if your income is higher, you will see more of a tax break from claiming these things. But regardless, make sure you're claiming them every year, because every little bit that you can get back on your taxes will make a difference for you. And again, talk to a tax professional to make sure that your RDSP and RRSP accounts are set up appropriately and that you're withdrawing them in the best way for you to maximize your income and minimize the tax that you have to pay. And make sure you're filing your taxes every year, even if your income is quite low. When you file your taxes every year, it makes you eligible for some of the tax breaks that are available for people who are low income or some of the rebates. So again, you'll get a little bit back if you're filing your taxes, even if you have virtually no income, and every little bit makes a difference. So moving on to equipment and supplies, the first one is one of the most common questions that we get on InfoLine, and I'm going to apologize in advance that I don't have a good answer for this one because our system is not very well set up to support people who are catheter users. That said, I am going to tell you the truth about what's covered. So funding through third-party insurance is possible, such as through your employer, ICBC, or WorkSafe. And again, those often end at 65. So check your plan if you're covered by any of those things. See when your coverage is going to end, because that is going to impact your retirement options. For those of you on PWD, obviously basic catheters are covered as well. The nice thing about being on PWD is that coverage can continue after 65 if your income remains low, which it will if you're on the old age security and guaranteed income supplement. Your income will stay low, and that will allow you to access catheters after 65, unlike everybody else. So that's the advantage of being eligible for PWD before 65. Probably the biggest advantage is you keep that equipment and supplies coverage after 65. If you're on Canada Pension Plan or Canada Pension Plan Disability and not PWD, there is no funding for catheters. You probably already know that, but again, it has a big impact on retirement in particular. Likewise with wheelchairs, you have funding through either third-party insurance, again, may end at 65, or through PWD, which can continue after 65. No funding for wheelchairs through CPP or Canada Pension Plan Disability, but there are a couple of foundations that can help with that funding. So BC Rehab or the Kinsman may be able to assist with that. And I'm just going to close another window because I realized I just had a pop-up. Sorry about that, guys. Okay. So other PWD funding, as I said, you can keep that PWD funding after 65 as long as you maintain that lower income. However, diet and nutritional supplements, for those who qualify, will end at 65 regardless of your income. Again, I don't agree with that policy, but it is what the government has decided. Okay. So other health funding, there are supplementary benefits available for people for things such as physio visits. These can continue after 65 if your income remains low, but you do have to apply for it each year. It's a limited number of visits per year, and it's capped at $23 per visit. Now, show me a physio who only charges $23 per visit. I would love to know. So the reality is you're going to be paying something out of pocket regardless for those visits. But, you know, again, every little bit helps. So vehicle funding, another very common question that we get. Again, I don't have a good answer for this one. There's no funding for vehicles through PWD, CPP, or Canada Pension Plan Disability. If you have ICBC or WorkSafe coverage, you may have coverage for vehicle adaptations. Check with your plan. It will very much depend on how your plan was set up, but it's always worth the ask if you're on one of those two programs. If you're working and you need a vehicle to get to and from the workplace, to either keep your current job or if you have a confirmed job offer, there is a program to pay for the adaptations, but not the vehicle itself, through the WorkBC Assistive Technology Services, which is run in conjunction with Neil Squire. So if you're still employed or wanting to be employed, that may be an option. We can give you some details on that. Unfortunately, that's the only program that will assist with vehicle costs. And as we know, those costs are going up exponentially every year. I don't know what to tell you. We don't have a good answer for that one. We do have used vehicles available through the SCI BC marketplace. Obviously, buyer beware with those ones, but you can get some really good deals. There are some of the companies that do vehicle modifications also sell used vehicles. The upside is that those vehicles typically are inspected and well maintained. You can trust the seller. Downside, they're going to be pretty expensive, maybe not that much less than a new vehicle. So pros and cons there. There are gas tax rebates, both federally and provincially, to save, or not to save, but to get a little bit back every year, up to $500 for the provincial one, less with the federal one, but you might as well do both if you're going to do one. And the ICBC auto plan discount will save you 25% on your basic auto plan if you have the gas tax number provincially. So a few options there to keep some of the costs a little bit lower. I guess it all helps. So other transportation options for those of you who aren't driving, or if you find yourself in a place where you can no longer afford to drive, Handy Dart is the door-to-door customized transportation available within cities. Obviously, there's limits on where that can go. You do have to apply for that. In many cases, you will have to have medical documentation of your need for the service. It's pretty easy to get. It's one of the easier ones. Taxi savers, you can buy coupons for basically 50% off up to a certain amount to save yourself some money on taxi rides. Not in every community, though, so it depends on where you live, whether or not the taxi savers are available. So the bus pass, if you're on PWD, there's some money included for a bus pass. And if you're 60 and over and you're low income, you can also get a lower cost bus pass. So again, an option if you live in an area that has good transit and you're able to use transit, but it doesn't work for everybody. If you're traveling out of town for medical reasons, then there's a little bit of help through the provincial government. Depends on where you live. So if you're on the island, for example, and coming into Vancouver, the the savings on the ferry travel can actually be quite significant. Savings on air travel for other parts of the province are not actually very good, and you might be better off looking at something like the Northern Health Bus, which comes from Northern BC to both Kamloops and Vancouver for appointments, as well as within Northern BC. That might be a better option. And there is a ferry pass as well to save you some money on your ferry travel if you're using that regularly. One note on the ferry pass, they've recently changed the program and you do have to reapply every couple of years, which is frustrating. But that was quite a recent change a few months ago and was not actually announced publicly as far as I know. Okay, so a few other funding options that may bring in a little bit for you. The Canada Disability Benefit, that's the new one that has been talked about a fair bit publicly. It came into effect in July. So anybody who qualifies for the disability tax credit and is under age 64 can apply for this one. You can receive up to $200 per month. It depends on your family income. So if you're working or you have a partner who's working, you're going to be getting less than that $200 per month. But the nice thing is it's not being clawed back if you're on PWD. So it is money that's free and clear for you. If you're under 64, I highly recommend applying for it because it's a very simple application once you have the disability tax credit. And again, it's an extra $200 a month. That can help a lot. Registered disability savings plan. So this is of primary benefit for people who are younger. So it may not be as applicable to this particular group, but there may be some who could still qualify. If you're under age 49 and you open this type of savings plan, once you have the disability tax credit, you will receive a little bit of money from the federal government for every dollar that you put in up to a certain amount. So it is a really good way of saving for people who are younger, but it's a primary interest for people who are quite young when they open their first one. If you're 48 now, you're only going to get a year or two out of it, so it's not as beneficial. And the Canada Dental Plan, again, this is a relatively new program. This covers basic dental care for Canadians. It was rolled out first for seniors a couple of years ago, and then they phased in kids, and it's now available to all members of the public. You do have to apply for it. It is somewhat income tested. So if you're high income, you're not going to get much benefit from it. If you're low income, there's an obvious benefit. Once you're onto that program, you'll receive an insurance number from Sun Life, which you take to your dentist, and they will do direct billing with Sun Life. You may still have to pay part of your costs depending on how much the dental office charges, because they can only bill so much to the plan. The main caveat with this plan is that if you are currently covered by, for example, an employment plan, you will not get covered through this plan. Even if you stop paying your employment premiums and opt out of your employment plan, you will be barred from the Canada Dental Plan for a couple of years because it's not meant to cover people who already have coverage. It's for people who don't have any coverage at all. However, if you're on PWD and you get your dental benefits through there, The two plans will work together to give you a little bit more coverage than PWD will offer by itself. So if you are on PWD, please apply to the Canada Dental Plan because it will be a net benefit to you. And getting some dental work taken care of is actually a really good way of improving overall health and well-being. So it's a good program. It's just not as perfect as it could have been, like a lot of government things. Okay, so for those of you who are homeowners, there are a few programs that can assist a little bit with some of the costs. There are a couple of federal and provincial tax breaks if you're doing accessibility renovations. Again, these are of primary benefit if you have a higher income and you're working currently. If you're lower income, they're not going to benefit you as much, but they are there, so it's worth looking at. The BC RAHA program is a renovation program through BC Housing. This one is also available for people who are renting, obviously with landlord approval, to make some renovations that are specific to accessibility. For this particular one, you have to apply first. You have to get approved. You have to have the work done. You have to pay the contractor out of your pocket, and then the government will reimburse you afterwards. But you have to follow those steps in order. If you don't apply first, you're not going to get reimbursed. And of course, we know that paying out of pocket and being reimbursed is a significant burden for people who are lower income. It's, again, a major gap with this particular program. That said, if you can borrow money from somebody to get some work done, maybe there's a net benefit there. So worth looking into if you need some renovations in your home. There's also the homeowner's grant, which can save you some extra money on your property tax that you owe every year. There's the regular grant that everybody gets if they live in their own home, but there's an extra grant for either people with disabilities or seniors that you can apply for. Property tax deferment is one that most people don't know about, but it's a really good option if you need some extra money every year and you just don't have the option of getting it any other way. So basically, this allows you to apply and not pay your property taxes for as long as you qualify for the program. So that can save you whatever you're paying in your property taxes, 1,000, 2,000 a year. And then when you sell your house or when you die, your estate will pay it. The taxes will be owing at that time. So it's not like you're never going to pay the money. It just means you don't pay today. So there's a little bit of a way of getting a little bit of extra money for use today, and then you pay down the road. There's no funding for repairs for your home. So if you need a new roof, that unfortunately is on you. So the only renovation funding is for accessibility renovations, unless you're living on reserve, in which case there is a program for some kind of emergency repair expenses. Okay, so home care. This is another one that comes up a lot. So I'm going to go through all of the different options, which of course all have their pros and cons. So if you're paying privately through an agency, there's a wide range of costs, but the typical minimum might be $40 per hour with a company, and there's often at least a 2-hour minimum per visit. So obviously that cost will add up fast. The advantage of hiring privately through an agency is that they do the hiring. They vet their staff, hopefully. They train them, hopefully. And they do all of the paperwork related to the hiring. Obviously, the downside is the cost. You can hire independently. You can hire your neighbor or a student down the street for quite a bit less than that $40 per hour, but you're looking at higher turnover and you're looking at maybe not having insurance for that person while they're in your home, and you will have to train them as well. So there's pros and cons to both of those private options. Now, for public care, there's home support and CECL. Very quick distinction between the two. Home support is when the health authority sends in their own staff or contracted staff. They do all of the administrative work related to those staff members, but they come in on the health authority's schedule, and you will probably get a different person every day, and you may have to train them in terms of what your body needs. CECL is when you get a lump sum of money per month, and you hire your staff yourself out of that money. Obviously, you report back to the health authority about how that's done. I'm simplifying this a lot, but you do have control over who comes into your home, when they come, what they do while they're in your home, and how they're trained. So again, advantages both ways, depending on your situation and how much help you need. Now, public care, we assume, is paid for by the government. In fact, that's not the case in BC. We're one of the worst provinces for our home care situation. So there is a daily rate for access to home care. It's based on your income. So if you're on PWD, there's no daily rate. You will not pay for this service, which is good, obviously. However, if you have the exact same income level as somebody on PWD, but that money comes from private savings, for example, or a different pension fund, you will be paying. You may pay for that service. So if you're working, the daily rate is capped at $300 per month as long as you have employment income. But that's still $3,600 a year. So that's a big chunk of change. But again, if you are not working and you have that same income level, you may be paying significantly more than that for that daily rate. And some seniors do pay thousands per year in the daily rate. In fact, the Seniors Advocates Office has done studies on this and have found that it's actually cheaper for people in many cases to go into long-term care to get their home support needs met rather than living in their own home and paying at the daily rate, because the daily rate is so high for some people. So this is a really good one. If you're looking for an advocacy issue, this is a good one to jump onto. It's going to become more of an issue as the seniors population increases, and I think it's one that the government needs to pay some attention to. Okay, so where to live as you get older. Obviously, you can stay where you're currently living, whether that's in your own home, something that you own, something that you rent. You could be living in a seniors independent housing building where it's simply a building for seniors, but no other care is provided. You could be living in a BC housing subsidized building. You could be living in a co-op, hopefully with a subsidy. So there's a number of options for community living. And I would say that if your current home is accessible and meeting your physical needs, staying where you are as long as you can is a good option. It's also good to know about the other options so that you can make plans moving forward. So assisted living, for those who aren't familiar with this term, it's another government term. And it's basically housing where you receive your meals and what they call light housekeeping. So that's a quick vacuum, maybe a wipe down of your bathroom, and your linens, your laundry, sheets, towels, and things like that are done for you. That can be either public or private. The public version of assisted living obviously has wait lists and may or may not be very accessible depending on the building. And you would be paying 70% of your income for that privilege. So again, depending on your income level, that might be quite a bit of money. Private versions can be thousands of dollars per month. So obviously not an option for everyone. Long-term care, that's what we think of as nursing homes or complex care where nursing care is provided around the clock. Again, those can be public or private. The public version is 80% of your income, but it's important to think about what's not included when you look at these options. Or you can have private, which can be $10,000 or more per month, depending on the facility. Private facilities don't typically have wait lists, but they're so expensive that many people simply don't have that option. The public system does have a lot of wait lists. So in order to qualify for the public version of either assisted living or long-term care, you have to need the service. So you have to qualify for that level of care, and then you go on the wait list. So in that interim period where you need the care, but you're on the wait list, you sort of have to cobble things together with home support or CSOL or family and friends helping out. It's not a good situation, and often people end up with worsening health during that period because they're not getting sufficient care for their their particular needs. And that's often where people end up in hospital. If you do end up in hospital, you will get bumped up towards the top of the wait list. But in the meantime, you're living in hospital. So, not a good situation. Um, what is included in that 70 or 80%, or more importantly, what's not included? So, things like your wheelchair, particularly if you use anything that's above and beyond a basic transport chair, you're going to be paying for that out of pocket. You're also going to be paying for toiletries, shampoo, conditioner, shaving supplies, that kind of thing, television, a phone, any entertainment that you might want, any outings, restaurant meals outside, presents for friends. All of that stuff is outside of that 70 or 80%. So it's worth thinking about what's included and what's not included when you're making those decisions. Of course, keeping in mind that you may not have a lot of choice in terms of what your living options are at this point. Okay, so there's a few discounts that may save you a few dollars here and there, depending on what your lifestyle looks like. So there's things like a fishing license for just over $1 in BC, access to entertainment for selected venues, your caregiver, if needed, or your companion can get in for free. You can always ask about disability or seniors discounts. There's lots of them. There may be free admission for caregivers at some venues. There may be discounts for things like internet or cell phones. There may be discounted meals at senior centers or churches or Meals on Wheels that you can access. So we have lists of all of this. So a few other important things that are not directly tied to finances, but I think they're really important to mention because a lot of people forget this stuff or don't think about it until after the fact. So you need to get your documents in order. And I said this for years and I was a hypocrite because I didn't do my own. And then I realized after dealing with my parents' situations that having the correct documents makes things a lot easier. It's still kind of annoying to have to deal with this kind of stuff, but if you have the right paperwork, it does make things easier. So the first one is a will. A will comes into effect when you die. This is what happens to your house if you own one, any bank accounts that you have, your personal assets, your personal belongings, or any dependent children that you have, or adults who are legally dependent on you. So if you have any of those situations, especially the dependent children, please get a will done so that your wishes will be followed regarding all of those things. Power of attorney is for legal and financial decision making. So if you find yourself unable to make decisions tomorrow, maybe you're in an accident or you have a sudden onset illness, whether temporary or permanent, a power of attorney can take over your bank accounts and make sure that your bills are paid so you won't, for example, lose your home. Or they can make legal decisions about selling your home if necessary to pay for your other care needs. Again, there are ways around this. Family members can petition the courts to take over your affairs in this case. That's a lengthy process. And if possible, you don't want the courts involved in your situation or the public guardian. It's better to do it ahead of time and then you choose who makes decisions on your behalf. Likewise, the representation agreement. So this is personal care and healthcare decision making. So personal care, obviously CECL, the Choices and Supports for Independent Living, is a big one that falls under the rep agreement, but also how much care do you want in particular situations? Do you want extraordinary measures? What types of procedures would you consent to? Those are all things that can be decided under the representation agreement. If you don't have one, then you're kind of out there in terms of who's making those decisions. It may be a family member that you don't trust to make those decisions. So it's better to say so ahead of time. Also included under the rep agreement is where you will live. So again, if you find yourself unable to make decisions tomorrow and you need to, for example, move into a care home, your rep can decide that on your behalf. And hopefully it's somebody who understands what you might or might not want in that situation. So it's a good idea to have somebody that you trust in that role. It can be the same person for all three, or it can be different people. Hopefully they know how to work together. but get these documents done. It's best to get them done by a lawyer if at all possible. And if you do all three at the same time, they bundle them and it's cheaper than doing them separately. Just a really, really good idea. I'll get off my soapbox now for that one. Okay, so if you have I'm almost done and then I'll answer questions. So if you have specific questions about your situation,
Yeah. Representative.
so if you have specific questions about your situation, you can contact InfoLine and we'll be happy to talk through your situation. But I will also answer questions now and I will stop sharing.
Things to be aware of. And the first one was the WorkSafe Van Adaptions Program. And Heather brought it up, but what you need to be aware of is that you need to be working. And I think they've removed the ability to apply for it if you're volunteering. You used to be able to apply for it if you're volunteering, and it needs to be at least 2 days a week, I think. And you need to be aware of it early because you want to apply for it while you are still working. And if you end up, not working, then you're not going to get it. And the amount of money is phenomenal. It's like over $50,000 to adapt a van, depending on what you need. But yeah, I applied for it, and luckily I was working and got it. But they won't adapt a used vehicle past a certain age, and that changes, that flexes around. I'm not sure what that actual limit is now, but a little while ago it was about 5 years, and you had to have it assessed in order for them to cover the adaptations in that van. And they're expensive. Anyway, okay, so that was my little soapbox about that one. And Megan, you've raised your hand?
I have. Can you hear me?
Yep.
Okay. My question is, and I hope I didn't miss this, but I'm just wondering about what happens if you're on CPP disability and you hit 65.
Yeah, good question. So if you're on CPP disability, you will be transitioned to regular CPP at 65 plus the old age security. And depending on how much you get in CPP, you might also get the guaranteed income supplement. So when you hit 64, you need to call Service Canada and let them know that you're almost 65 and ask what your options are and how much you're going to be getting. There are calculators available on the Canadian government site that will give you an idea of how much you might receive. I wouldn't rely on that completely. You really should be talking directly to Service Canada to find out.
Okay, great. Thank you.
Okay. The other thing that I think I always get on a little soapbox about is home care. Heather's right. BC is the most expensive place in Canada for home care. BC, there's many provinces that don't actually charge for home care that believe in universal health care. And BC, unfortunately, isn't one of those and is the most expensive. So you need to pay attention to the $300 a month fee if you can get it. And again, you have to be working to get that. And I don't agree with that either. But you might not be thinking about it because right now you don't need it, but eventually you might need a little bit of service. I never expected to need home care services, and yet I now need it once a day. And the decision between getting it from the provincial provider like Vancouver Coastal or the Island Authority or doing it through Cecil is a very interesting decision to make. If you get it through the provincial provider like Vancouver Coastal or the Island program, the thing that you do get is a casual list so that if somebody calls in sick, there's always somebody available, usually anyway, that can come. And they might not come at the same time that you're used to, but they will come. If you're on Cecil, you have to manage your own casual list. And I'm not sure if anybody actually helps with that now. I thought that Paul Gautier's program actually had some people that might be available, but I'm not sure about that. So you have to keep on top of all these things. There is active advocacy work going on around home care costs with our provincial government. Helen, you've got your hand up?
Yes, I do. I've got a question related to when they calculate the 70% for assisted living or 80% for assisted living, I don't think they use absolutely full income. I think they delete some things, but I don't know what, like, do they include old age security and GIS? Or do they take some of your personal deductions off? I don't think they do it on necessarily all our income, but I've asked that question. I've not really got an answer because the people I ask aren't the ones that do the calculations, and so they don't know.
Yeah, you're right that there is a calculation that they go through, and it's been a while since I've looked at which pieces they include and which ones are not included. The health authority will send in a case manager to meet with you ahead of time to talk about that, and they should be showing you what those deductions are. Um, I'll see if I can find the calculation, though. I know I've seen it.
Yeah,
It's been a while, and I'll try and
that would
send it
be
out.
that would be great because I know I asked the case manager when she came, just in terms of planning ahead and sort of figuring out, okay, is it better to stay where we are long term, or is it time, when the time comes, should we be, and how much and that. And also another question would be how much do they allow you to have in assets, and what do they consider assets? Like there's a
Yeah,
limit on that as well.
there is. Again, I
I
can't remember off the top of my head exactly what the assets
yeah,
are.
I know when my parents went into assisted living, I was actually surprised that they were eligible for some subsidy. And, because in my head, I sort of calculated out 70% of their income because I was helping them at that point and I expected they'd be paying full rate. But in actual fact, I remember, the case manager said, "Oh, no, no," because I took da 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 off, and they were eligible for some subsidy. So
Yeah, let me look that up and try and find it. The other
that would
thing
be
to keep in
great.
mind, for sure, the other thing to keep in mind is if you're a couple and your partner is going to continue to live in the community, for example, the home that you own or rent, there may be some implications for them as well. In some cases, they look at family income for that calculation, and it's 70% of the family income. It depends on the case manager. So in my parents' case, we got lucky and they chose to deal with one person's income separately from the other, which left the other partner enough money to live on in the community. But it depends on the situation. So it is something to keep in mind as well. I have heard of people going as far as getting divorced at the age of 85,
Yeah,
so
so
that
have
they're,
I. Yeah.
yeah, which is absolutely wrong, of
Yeah,
course.
just on paper, they've had to do it too.
Yeah.
Yeah. Yeah. Another question, and this is sort of not totally financial, but my husband, I mean, we would be together in terms because he's got health problems too. Um, but I went to an open house at one, it was a private place, and asked, he's celiac. And so I asked, can you accommodate a gluten-free diet? And they said no. So I phoned another place, and they said no. I thought, oh, I just assumed they'd have to. So I wondered if the public assisted living and residential care, if they have to accommodate and are able to accommodate. I mean, that's not totally a financial question, but well, I guess for assisted living, it would be in the sense that it might be that we'd have to purchase all those groceries ourselves. And then how do, they'd be making a charge for his food, and yet we'd be paying for it, sort of thing. Yeah,
Yeah,
so
it's a
so
good
that is,
question.
I know diabetic, they're fine because they're used to that, but apparently, and I thought, who do I ask in terms of the public? Yeah.
So on paper, they do accommodate for celiac and other diet related issues. That said, I would personally be concerned about cross-contamination in that case and whether or not that particular food will always be provided appropriately. So yes, the public facilities do it. I would be asking a lot of questions before moving in there and while living there to make sure that it's provided on a daily basis.
Okay, thank you.
Okay, Marnie, you have your hand up?
I forget one of the questions now, but one was, oh, are there any, do you know if there's any kind of like group homes for people with physical disabilities where it's like shared care? Like, I know there's some through community living, but I don't think that's physical.
Yeah, good question. So there's a few. There's the Steveston Residence and Falls Creek Residences, which are run by the same organization. They do have wait lists for those ones. I don't think they've taken anybody for years, but worth contacting them. VRS has some buildings that are shared care model. Typically, they aren't subsidized though, so it depends on your income whether or not that's an option. And then there's a lot of buildings, particularly in the lower mainland, where you might get a higher level of physical accessibility in the building, where people are with disabilities are more likely to be living, and you can make informal shared care arrangements. But there aren't group homes per se. Well, there's a few, but there aren't a lot of them. And I'm just making a note to include that in the resource list.
Can I interrupt just for a sec on the answer to that one? Falls Creek and Steveston. I used to run Falls Creek Residence for 6 years, a long, long time ago.
I didn't know
And I
that.
can tell you that the people that were there when I ran it almost 25 years ago are still the same people. So it does not move. It's a long-term care facility where you have your own bedroom and you share a bathroom with your neighbor, so two to a bathroom. But it was developed a long, long time ago, and it was developed for young adults with physical disabilities. But as society grew and developed more options for people with disabilities, it became more of a place for people who had physical disabilities, but also had another type of disability that made their socialization in the community very difficult. So they have stayed there the whole time. So it's no longer, neither one of those are, they're not very open, and you can't be extended care to go there. And they wouldn't be appropriate for people who are, what shall I say, cognitively aware of what's going on around them and socially adequate. They're not great for that. And the other one that Heather was talking about, there are some buildings that have shared care services. The other way you might be able to do it is work it through Cecil, in that if you can find a few people in Cecil that you know that are in the same general area you are, you might be able to develop your own shared care system. That's probably one of the ways to go. Juan, you have your hand up?
Yes, thank you. My question, I am very close to get 65 years old in a few months, at the beginning of next year. And my question is, who can help us to get a master plan to apply for benefits? Maybe a social workers, maybe InfoLine, because we are low income, and for sure I was approved as well for the disability tax credit. I was approved, and now I don't know the master plans. How is the order? I need help, maybe a social worker in the community or maybe in InfoLine. If I give to them numbers and everything, they can make a master plan to apply this one first, this one the second one, something like that. Is possible?
Yeah, we can tell you which ones that you need to apply for and give you the right phone numbers and that kind of thing. So contact InfoLine and we can put that together for you.
Okay. Okay. Thank
But
you.
you might also want to be talking to an accountant just to look at how much you're going to be getting from the different options. That's something that we can't do because we're not accountants.
And who can help us in the community? Do you know someone or any other options? Because account, we don't have accountant. Because
Yeah, an
I'm
accountant or a
always,
tax professional. Let me think about that one.
okay,
I've got somebody in mind, but I want to confirm that they would be the right option.
okay.
Good stuff.
Because
Making a note.
Any-
PWD will finish for me soon as well, and I get 65. That's why I am very worried, because now I don't know how is the order to apply for the benefits.
Good.
Yeah, the biggest one is to talk to Service Canada, because they're going to transition you from whatever you're currently on to CPP, Old Age Security, and GIS if you qualify. So Service
And that,
Canada is the big one.
and that service is by phone? I need to call them.
Yeah, it's generally by phone, but you can go in person depending on where you live. Probably,
Okay.
yeah, pros and cons to going in person versus by phone. But call
Okay.
InfoLine and we'll figure out your better option.
Perfect. Okay, thank you.
Okay, I have a question. I have a will, and I just did it on Willful online. It was very simple, very easy to do. Where do you actually access a representation agreement?
So you can get a standard one through the NIDAS organization, and that's on the resource list that I'm going to send out. So that's if your situation is relatively straightforward.
Yeah.
It's basically naming somebody who will make your healthcare decisions.
Yeah.
And hopefully you should be having a talk with that person about what you would want in different types of scenarios.
Okay.
I would say that things like willful are definitely legal, they're valid. If you have any complications in your situation, such as dependent children or that kind of thing, my recommendation would be to talk to a lawyer just to make sure that things are done right so that everything is taken care of. So yes, it's legal until somebody wants to fight it, and then you could run into some problems. So the recommendation is always for a lawyer if you can, but willful is fine if you can't get a lawyer.
Yeah. And the other thing that I wanted to say, it doesn't look like anybody else has their hand up, so I'll just say something. Is that a lot of these things that Heather's gone over, she's done a great job of identifying the things that are available. A lot of them are handed up based on what's called a fee assessment. And those fee assessments are different for probably every single one of them. And, sometimes the fee assessment will accept expenses that you think are expenses to you, but other people might not. It's a landmine. Like, the fee assessments are very interesting, and a lot of them don't get updated because people just forget about them, and especially the government. I hate to say that, but when you go to home care and the advocacy that's going on with home care, their fee assessment says that a family of four can only own $26,000 before they start charging fees. Well, you can't live on $26,000, a family of four in BC anyway. But then you get charged additional fees. So it's just you have to check out every one of these things and make sure that you know what's going on with them so that you can save yourself as much money as possible because unfortunately, as you get older, things cost. And I think the other thing to watch out for is medical equipment that you might need and check your supplier, whoever that might be, if it's an insurance company, WorkSafe, ICBC, or yourself, as to how you're going to cover some of those things. And it's not always black and white. I have Blue Cross, but Blue Cross doesn't cover everything. And there was one item that I needed that Blue Cross didn't cover, which could have cost me up to $15,000. But thanks to SCIBC's marketplace, I got a few of the items used, and I think it only cost me about 4,000 in the end. But I still had to pay that out of my pocket because Blue Cross didn't cover it, even though it is very definitely a medical expense. Marnie, you have your hand up again?
I think that was about the new disability benefit. So do you know anybody that's applied, or like how long does it take? And I didn't know you had to apply, so thank you very much.
Yeah, it's actually quite a simple application. So you can either do it online or by phone. But if you're over 64, you're not going to qualify. So I don't know who in the call is over or under 64, but that is the cutoff for that particular benefit. It's meant for working age adults. Again, I think that's a ridiculous policy, but it's what the government decided on. And a lot of what I have said is probably going to make some of you quite frustrated or potentially angry with our system, rightly so, because there's a lot of gaps. I think all of us can and should be advocating for change, whether it's federal, provincial, talk to your MLA, talk to your MP, seniors advocate, anybody you can think of, call us if you want to know who to talk to, and we can help you with a list of people who make decisions, because a lot of these policies have significant gaps. And unfortunately, those gaps are going to be affecting all of you in one way or another if they're not already. So I think it's up to all of us to try and make those changes.
You just reminded me of something, Heather, that there was a meeting recently with the BC seniors like advocate.
Dan
And,
Levitt. Dan Levitt.
one thing he said was do not do the oh, what's that one like where you kind of put your house up as collateral, the reverse mortgage.
Oh,
Never do the reverse mortgage. He was pretty adamant about that. So,
Yeah, I can't speak to that one specifically. I'm not that knowledgeable about those types of options, but definitely you'd want to talk to a lot of people before you make a big decision like that.
Dan Levitt is the CEO of the Seniors Advisory Council. I think that's their, or no, Seniors Advocacy Council. They're the ones that wrote the report in 2019 on home care services in BC. And they identified all of these issues. And unfortunately, at this point, the government still hasn't done much about these issues. So they've actually, it's kind of, they've made it so it's less expensive for an individual to go into long-term care, public long-term care, than to pay for home care services. But it costs the government more if someone's in long-term care than if they're providing home care services.
Mm.
So it's like they're, stepping on their own toes and they don't realize it.
yeah, it was Dan Levitt. So I suggest if you see any meetings with him, try and get out there in person.
I really want to say thank you to Heather because she has gone over most of the stuff that, you're going to need to know or you already know. It looks like she's set up some help for a couple of us online already. And I want to say that if you have questions, the info line is available. And I got to say that it does a great job. All right. Thank you.
Bye.
Bye, everyone.